Hello everyone and welcome to Lesson 6. It's a little early to be talking about Forex brokers as there are still many things to learn before you can start trading. But we have decided to give you really useful information early on, so you can start researching Forex brokers in your country. It's really important to find an honest broker as you will be handing over your money to them. So before you do that, check out our lesson on how to find a reputable and honest broker. Make sure you like, subscribe, and turn on bell notifications. It really helps the channel to grow. Before we jump into the lesson, a quick disclaimer. Smart Forex Trading offer educational videos to help and educate Forex traders. Information on this channel is for educational purposes only and should not be considered financial advice. We must advise you Forex trading carries a high level of risk, and you should be aware of the risks before trading in Forex. Welcome to Lesson 6, our complete guide to Forex brokers. When you are ready to start trading, you will need to find a Forex broker to handle your trading account. This will be your first step into the real world of Forex. You need to take great care and spend some time on researching brokers before you hand over your entire life savings to a totally unheard of broker trading from a backroom in the Marshall Islands. By the way, do you know where are the Marshall Islands? If you do, leave a comment below. Here's what you need to before you choose a broker. In order to trade Forex, you will need a trading account with a provider of online foreign exchange trading, more commonly known as retail Forex brokers. When you open a trading account with this company, you will need to deposit money to the account so you can trade. Wait a minute before you hand over your life savings, just ask yourself, are you sure you can trust this broker? Unfortunately, not all brokers are honest and trustworthy. A major issue with the Forex trading industry is a lack of transparency and unclear regulatory structures. Unfortunately, the Forex market is less regulated than other financial markets, making it more prone to fraud from unregulated brokers. There are many respectable regulated brokers, and there are plenty of dishonest unregulated brokers. Be careful which broker you choose. This explosion of novice traders who just blindly jump straight into trading with very little trading knowledge creates more opportunities for unregulated brokers. They are guilty of fraudulent systems, order manipulation, refusal to pay out, or preventing account holders from withdrawing their funds. This is why the most important first step is verify the legitimacy of the Forex broker you choose. Never just blindly trust a broker. Don't worry, we will share some important tips to find a trustworthy, respectable broker. When you're looking to trade Forex, it's important to identify brokers who are reputable and avoid the ones that are not. In order to identify reputable brokers from shady ones, you need to do your homework before depositing a large amount of money with a broker. The Forex broker you choose is going to be your first critical decision as a new trader. Why? Because you're going to be handing over your money to this broker. You need to ask yourself, is the Forex broker a real company and is the broker regulated? Don't be fooled by a nicely designed website and lots of slick marketing. Make sure there's an actual legally incorporated company behind that website. Here is a checklist to verify that broker is a real incorporated company. What is its formal business name? Where is it incorporated and registered to do business? How long has it been in business? Can you find anything on Google about the company? Where is it located? It is really important the broker should be located in the place where you live or in a trusted country. Does the company have a physical office address? Don't be fooled by a listed address on their website. Make sure there's a real office behind that address. A simple way to check if the office is an actual office is to use Google Maps. Enter the address in Google Maps and see what appears. And to get a better view of the office, you can also use Google Earth. Enter the address in Google Earth and see what appears. Zoom in until you can see the building they're in. Is it an actual office building? Or does it look suspicious? If no building is present and instead, you're seeing a garage on a tiny tropical island, you probably want to pass on this broker. Who runs the company? Do you know who runs the company? Or is it a ghost corporation with no active employees? Who are the principals of the company? A principal is generally someone who holds a significant ownership stake in a company or has a formal title and ability to control the company's activities. For example, principals could be the founder, president, other executive-level officers. Can you contact the company? This is a critical test and we cannot stress the importance of giving the broker a quick call to check if they have a customer support service. If you have an urgent question, you must be able to contact customer services. You do not want to be calling a garage located in the Marshall Islands and talking to the guy who pumps petrol for a living. Does the company provide multiple ways to contact them? You want to make sure your broker is there when you need to ask a question or have a problem. Go to their website and check if the company has the following information clearly displayed. Does it have a phone number? Does it have an email address? Does it have a live online chat? What are its customer support hours? Check all the contact methods work and there are real people at the end of the line. Call the phone number. Does somebody pick up quickly? Send an email. How long does it take to receive a reply? Start an online chat. Does it work? Are you talking with a real human or are you just chatting with a bot? What are their customer support hours? Is their support staff available 24 hours a day, 5 days a week? One of the best ways to test their support is to open a demo account and just contact the brokers with a few random questions and check the speed and authenticity of the replies. Since you're a potential new customer who may open a live account, they should be responsive. If not, it should make you wonder how their support will be once you're really a customer. A reputable broker should have a dedicated support team that can answer your questions. In a live trading situation, phone access or live online chat is a must since an email reply may take days. At the end of the day, you want to make sure that the broker will be there for you when you need them. Do remember the important question you should always be asking yourself, is your money safe? Do not rush into opening a live account or real money account without knowing how your funds will be handled. You need to ask the following questions. What bank do you use to store customer funds? Are customer funds held separately from the company's bank account? The Forex broker should be using a reputable bank. Ask who they use. Would you trust your funds with an unknown bank? Before you deposit any funds with a Forex broker, make sure it uses segregated accounts. A segregated account is a dedicated bank account where all its customers' money is kept completely separate from the company funds. This means that your money is kept entirely separate from the broker's money. Here is a quick summary of everything we have covered so far. Is it a real company? Where is it located? Who runs the company? Can you contact the company? Is your money handled safely? There is one last question that you should consider that's crucial and why we saved it for last. Is the Forex broker licensed and regulated? Is the company licensed, regulated, and authorized to operate as a Forex broker where you live? Forex market regulation refers to the rules and laws that firms operating in the Forex industry must follow. The purpose of regulation is to protect you from financial risk, shady practices, order manipulation, and outright fraud. In simple words, regulation tries to protect you from dishonest brokers doing shady things. There is no single global body governing the Forex market to police the massive Forex market. Instead, regulation is carried out by individual countries. Most countries have a regulatory authority that lays down a framework of rules and standards that must be followed by Forex brokers. These rules include being registered and licensed with the regulatory body, undergoing regular audits and reviews to ensure that companies comply with the regulatory requirements. Each Forex regulatory body operates within its own jurisdiction, and regulation and enforcement vary significantly from country to country. In short, regulatory requirements are established where Forex brokers under their jurisdiction must comply with. If a Forex broker doesn't comply, the regulatory body has the power to issue fines and disciplinary action. These fines can be substantial and provide a strong incentive for companies to operate within the law. And if fines don't work, the regulatory body can ultimately revoke that company's operating license. Forex regulations differ from country to country. This means that not all regulatory agencies follow the same kind of regulations or offer the same type of financial protection. Not only do the regulatory requirements differ, but the enforcement of these requirements also differs from country to country. Essentially, the stricter the jurisdiction, the more protections that individual traders have. Stricter requirements such as having a local physical office and staff, requiring a large amount of money to start operating as a broker, plus additional money set aside as reserves, regularly submitting reports to verify compliance with all license requirements. Even with all the added compliance costs and headaches, reputable brokers still choose to register and be regulated in stricter jurisdictions since it improves their credibility and builds trust with their customers. Countries with strict regulation: USA, Japan, United Kingdom, Canada, Australia. No regulation Forex jurisdictions: Belize, Bermuda, Cayman Islands, Cook Islands, Marshall Islands, Mauritius, Kenya, Seychelles, Vanuatu. Most of these tropical islands are known as offshore jurisdictions, which are low or no tax countries with minimum regulatory compliance, which is why are preferred locations for dishonest brokers. Be wary of unlicensed Forex brokers. If you Google Forex broker, you'll probably come across many companies that operate as a Forex broker without a license. An unlicensed company is not regulated by any regulatory agency. This means that it is not bound to abide by consumer protection rules such as safeguarding customer funds, providing clear information and disclosure of how it executes trades, resolving customer issues and complaints. They may promise better trading conditions, including deposit bonuses, tight spreads, and ridiculously high leverage. However, we recommend avoiding them since the probability that these companies are dishonest is high. If you experience unfair treatment, such as manipulation of trades that result in losses or the inability to withdraw your funds, you will not be protected by any specific law or regulation. Due to the company not being regulated, you wouldn't have access to complaints procedures or compensation schemes in the event that of something going wrong. Why should you always pick a regulated Forex broker? A regulated Forex broker means that it must comply with standards set by the regulatory authority, which helps ensure that the way the Forex broker conducts business with you is ethical and fair. If you are not satisfied with the level of service, or if you think you're being scammed by your broker, you can report a regulated broker to its regulatory agency. While the regulatory agency usually does not get directly involved in any conflict between a company and its customer, it will investigate any instances of fraud or consumer abuse. If found guilty, the regulatory agency can issue big fines, revoke their license, and even permanently ban the broker from operating in the country. By requiring Forex brokers to operate within a set of rules as defined by the Forex regulatory agencies, traders can be confident that when trading with the Forex broker, they are treated in a fair and ethical manner. Lastly, why wouldn't you trade with a regulated Forex broker? Why would you choose a dishonest broker? We're not saying that every unregulated broker wants to cheat you out of your money, but given that the retail Forex industry has a history of being prone to fraud, why take the chance? How to verify a broker's regulatory status. Every Forex broker who is licensed and authorized to operate by their regulatory agency receives a unique ID number. Regulated brokers are required to display their regulatory information prominently on their website, so you should be able to easily spot their ID number, usually at the bottom of every page. A regulatory agency's website should provide information about a broker, its owners and company executives, a brief history of its operations, and any regulatory actions that were taken against the broker due to non-compliance issues or customer complaints. For example, a Forex broker may claim to be licensed to operate in the UK by displaying an FCA register number. Rather than just blindly believe it though, you should visit the FCA website and verify their FCA license yourself. Verification can be done by performing a quick search on the FCA website. You can search by name or by number and check if the regulatory information on the broker's website matches. Always trade with a broker that has a physical office in your country. Let's run that one past you once more. If you want your money to be safe, trade with a regulated broker that physically operates in the country you live in. Using Forex brokers who operate outside your country is highly risky. If the regulatory agency, the broker and you are all in the same jurisdiction, you will be better protected because you can report your broker to the regulatory agency if you feel you're being cheated. If the broker doesn't have a physical office in your country and or isn't regulated in your country, you're most likely going to find no legal recourse if something goes wrong. How to verify your broker. So you're interested in a Forex broker, and before opening an account, you've done your research. The broker looks safe, so you open a live account. You probably have an amount in mind that you want to deposit. Don't do it just yet. First step you should take is to open a demo account. When you are ready to open a live account, only deposit a small amount. Open and close a couple of small trades. Request to withdraw your entire account balance. Confirm that you've received the funds. This allows you to check out the Forex broker in a safe and controlled way. If everything goes well though and you're pleased with the trading experience, You can then deposit a larger amount. Just before we end this lesson, take a note of these 3 critical checks. 1. Never open a Forex account with a broker outside of your country. 2. Only trust a regulated Forex broker. 3. Start with a demo account. When ready, only deposit a small account. If all goes well, only at that stage should you trust the broker with your money. We hope you found this lesson useful and it will help you to look after your money. We look forward to seeing you in the next lesson. Help the channel to grow. Like, subscribe and turn on bell notifications. We hope you enjoyed the lesson and we will see you on the next one.